Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, welcome back, guys, to another exciting week. We're in, I guess, officially the third week of January. So far, we've seen in the last few days what are considered record ETF inflows, although I know not as high as most people have expected, but hopefully those will grow over the coming months. Solana is dropping pre-orders for the V2 of their phone, expected to come out next year or ship next year. Coinbase and the SEC are in the courtroom duking it out today over the SEC's lawsuit against Coinbase. That will be really interesting to see how that shakes out, especially after the last few months of regulatory action. And then last but not least, just saw this headline, but the CEO of Cantor Fitzgerald, a very prominent Wall Street trading firm, has gone on CNBC and confirmed that Tether does in fact have reserves to back their stablecoin. As a reminder, I think it was a few weeks ago, maybe a few months ago, the CEO finally declared that they were the ones who are actually executing Tether's treasury purchases for them to kind of generate yield on the base of assets that they hold. Tether, while affiliate or incorporated offshore, it's still the largest stablecoin issuer out there. But I got some normal tokens to talk to you guys about, not just stablecoins. So we will jump right in for this week. So we're going to start by talking about Arbitrum. So Layer 2 project Arbitrum had passed a vote to create a long-term incentives program, which is going to basically give out between 25 to 45 million tokens, which is about 51 million to 92 million at today's prices. And these will be incentives for long-term building on Arbitrum. So the vote comes after an incredibly successful incentives program called the short-term incentives programs, or the STIP. We're now looking at the LTIP. And basically this led to significant rallies in smaller tokens because a lot of them received a large balance of ARB tokens compared to their market cap. So for a lot of them, they were able to give out non-dilutive funds to grow their project. So we've seen projects on Arbitrum really get a huge bump in the last 2 months from this STIP program. While the proposal passed, it's still likely it's going to take a few months before we see the distribution of grants, since there is a multi-week path for projects to apply and be accepted before grants can be released. Despite this news, Arbitrum is down 1.8% for the week. All right, next we're going to talk about AAVE. A forum discussion within AAVE, the decentralized lending protocol, is garnering some eyeballs as it deals with the potential launch of AAVE's lending marketplace on the Neon EVM. Neon is basically a middleware provider that allows Ethereum-based apps to work on Solana. So if you aren't familiar with Solana and Ethereum, they're the number 1 and number 2 largest layer 1s right now. And basically, both of them use kind of different architecture and scaling solutions. So Ethereum is kind of the original layer 1. It incorporates something called the Ethereum virtual machine, which is basically how the blockchain kind of transcribes what is written in smart language code and executes it. Now, Solana has a totally different process by which that happens. So what it means is that if you have a dApp that lives on Ethereum, it can maybe work on Avalanche, it can work on BNB chain, it can work on layer 2s like Optimism and Arbitrum because they use EVM. However, if you want to go to Solana, you basically have to recode your tech stack from the ground up. It's very complex. So Neon was created as this like middleware to kind of bridge the two. So this is really super cool. Like I said, this would essentially, if they deployed on Neon, it would essentially bring AAVE's marketplace to the Solana ecosystem, which would be really important to keeping the project relevant right now in a time when users are just flocking to Solana en masse in terms of, you're seeing DAUs, usage, all that stuff go up. So really would be a great move for them. Now, the forum post suggests that AAVE would just launch Neon, or would only launch on Neon with only 3 lending assets to start, which would basically be SOL and a couple staked SOL derivatives. And then there would also be only one borrowable asset, USDC. So although the initial post seemed fairly straightforward, some community members have been butting heads over and questioning, each other on some of the bridging aspects, Oracle aspects, because really the move is pretty complex. It's not quite as simple as we're just going to launch here. So it'll be pretty interesting to see what happens on this one. It's currently kind of in the temperature check stage, but we'll check back in just because this could really help expand AAVE's TVL and bring more lending activity to Solana. With this, however, AAVE is down 1.7% for the week. All right, next we're going to talk about Ripple. So payments provider Ripple announced last week that they're going to be initiating a $285 million share buyback program, valuing the equity of the company at $11 billion, which is massive. So basically this share purchase is going to be to buy out early investors, but the investors are not even allowed to sell more than 6% of their holdings. So yes, that is quite a bit of money. So Brad Garlinghouse, CEO of Ripple, has also stated that the company plans to do more buybacks in the future, especially as it has no intention of going public with the current regulatory climate. Ripple always manages to pop up back on the radar whenever you think it's not out of the spotlight. Anyway, Ripple's down about 10 bips for the week. Okay, last but not least, we're going to talk about Chainlink. So Chainlink, the decentralized Oracle network, announced yesterday that it's integrated with Circle to make USDC more interoperable. Circle is the issuer of USDC, which is the second largest stablecoin after Tether, and operates kind of within the United States regulatory framework. So Chainlink operates something called CCIP, which stands for Cross-Chain Interoperability Protocol, and that facilitates communications between blockchains. Circle recently launched CCTP, which is their cross-chain transfer protocol, which allows for native USDC to exist cross-chain without the need for a mint redeem function via bridges. So I've talked a lot about this in the past. There's been a lot of hacks on bridges. They're like this really bad single point of failure when you're moving from one chain to another, because basically what happens is if you take your ETH and send it from Ethereum mainnet to say Avalanche, you're not actually most of the time getting your actual Ethereum over there. What's happening is that you are getting a pegged version of your ETH. And what happens is that the bridge operator holds your ETH in like a holding contract on the Ethereum side. So that has led to a ton of exploits because a lot of hackers and exploiters will target these bridge contracts, trying to drain the assets that are held on the unpegged assets that are held on the other side of the bridge. So USDC coming in and saying we're going to do this native mint burn function is huge. It's also only doable because USDC is a centralized stablecoin, right? And so the company can actually verify like where the tokens are at all times. They can mint and burn them, at will. So this is super cool that they're able to do that. And it's been expanding slowly to different chains. But the idea here is that this partnership is going to basically allow other projects, not Chainlink or Circle, to build any cross-chain applications that integrate with that USDC, since now they can also use the communication provided by Chainlink and they can have the USDC provided by Circle. So this is super cool, obviously really relevant, like I've talked about, especially with the number of L1 and L2 blockchains that we keep seeing like added. So these solutions are crucial to the growth of the ecosystem. On this, Chainlink is up 11% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.